If you've been trading for any length of time, you know that the signals can be difficult to read. But some days, the signals are pretty clear and we can make a good determination which way the market is preparing to move. A signal came up on this past week, actually February 8th, that was very insightful, and I sent out a notice to my subscribers telling them that the market is likely to move in a certain direction and why. Here is the one-day chart of the S&P Futures for the week of February, ending February 10th, but I have my cursor right on the February 8th candle. This was Wednesday, February 8th. If you take into consideration this February 8th candle and the preceding candle, February 7th, do you know what this pattern is? You should. This is called the bearish harami, and the bearish harami generally indicates that the market is going to go down. I say generally because nothing is certain in the market. But I sent out a notice, and I send out a notice every evening with my tailored trading zone report. And I want to read a part of it to you. I want to show it to you. Here's a copy of my trading zone report that I sent out the evening of February 8th. And this is the E-Mini Trading Zone report for Thursday, February 9th. And in the report, and I want to read this portion of it to you, I highlighted the one-day chart, and here's the harami, okay? For Thursday, and again drawing on technical analysis, an assessment of direction can be made from the formation seen at right, a bearish harami. This well-known formation is often a signal that market prices are likely to decline. A clue on Thursday will be where prices open, and if they make an early high that isn't taken out, the bet will be to go negative. Support for Thursday is forecast at 41.13, and so on and so forth. But nevertheless, that was what I wrote to my subscribers. And I send this report out together with my trading zone calculations based on Taylor's trading calculations, Taylor's trading technique. And my report said resistance was 41.64. That was the top line. Support at 41.13. Okay, so let's now go to what happened on February 9th, okay? Here's February 9th, and here is my trading zone, okay? Resistance at 41.64, support at 41.13. And where did the market open? Right over here. And I said, if the market opens at a high and it is not taken out, then the odds are, the move is to go to the negative side, to trade down to the negative side. This trade, my friends, was good for 50 points. If you stayed on, it was good for 80 points, but nobody ever knows. I go by information, and my information was the harami in conjunction with my trading zone of resistance and support. Of course, the close of the previous day was at 41.29, so that gap was closed. And it was a wonderful trading day, and it was an insightful trading day. But this trading day was informative because not only did the harami give a clue that the market was headed down, but also the trading zone forecasted. And also knowledge of the intraday high or low being put in within the first half hour to an hour. So this is the kind of insightful information I send to my subscribers. If you're interested in getting this report each evening, subscribe at my site at timelessdollar.com. You won't be sorry. This is valuable information. I send it out every evening. It's based on my 20 years of trading experience, my knowledge of the Taylor technique, which is a very difficult calculation to formulate. And I think you're going to find it very profitable. So thanks so much for watching. Trade safely, use a lot of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading.